right, all right, all right. Good morning, good afternoon, good evening. Wherever you're watching this, welcome back. I am Blair Armstrong with Team Armstrong, Coldwell Banker. I am a global luxury specialist in the world of residential real estate, located here in beautiful Coachella Valley. On my right, possibly your left, depending on how this records, is a very good friend of mine for almost 5 years now, Sean LaRue of Sean LaRue Home Loans. It's good to have him back. If this is your first time here, we do a weekly podcast really built around kind of what's happening in the mortgage world. We do talk a little bit about residential real estate once in a while as well. But if you're looking for a resource specifically about different types of loan, what's going on in the market concerning that stuff, this is the channel for you. We are not a monetarial podcast. So one thing that we ask of you, what does that mean when you say monetarial podcast? We do not have sponsors and we do not have any advertising that comes on here. So what you get from us is a straight 15, 20, possibly 30 minutes, depending on the subject. So our fee for this show is to share it. We will tag you in different things. Sean has his own YouTube channel, which he'll tell you here in a little bit. My YouTube channel is Team Armstrong. You can see little clips throughout Instagram and Facebook. And then Sean has his YouTube page. Sean, what's your YouTube page?
YouTube, Sean LaRue Home Loans.
Okay. So find one of those. Again, we'll kind of put those down, where to reach out to them. But the biggest thing that we ask you for is that if you see something in this episode, share the show. And then when you end comments, will you just tag us in that? That would be really great. Just kind of know what type of impact. We know that you're watching it. We can see the views and stuff like that. But when you share it, just tag us in it. That's good. So it's been a week, brother. Typically we do these, this is a great thing about this is super organic conversations. We have kind of topics like, hey, let's talk about this week or whatever. We tried to get this done yesterday. We had some technical difficulties, which turned into some illness difficulties. So here we are bringing our friends, family, and potential clients, maybe some information. So you doing okay?
I'm doing great, brother. Woke up, got lots of rest. Woke up feeling good, lots to do, lots to get done, and just checking everything off. So yeah, it's always an interesting balance between personal life, work life, health, family, technical issues. It's always a fun show, huh?
It is that everyone for a long time that you and I went through all these stuffs and all these seminars that you go through business and stuff like that. It's like you've got to find balance. There's never balance, man, especially in our world. You wake up thinking, okay, this is what we're going to do today. And one phone call changes everything, which is not a bad thing. But you have to be definitely super open to fluidity in this industry at any given moment. Even like, hey, I'm going to go show this house, or we're going to close a loan, and one little hiccup changes the whole dynamic of the day. So
flexibility and problem solving. That's what we do.
I know TV wants to make it look like it's super simple and we're rolling in money. Be very careful watching all reality shows. Chrissy wants me to watch those once in a while. I'm like, I can't do it because it's not real.
I love the flipper ones. We bought it for $60,000 under market. We have absolutely no expenses, and the cost for the rehab is 30% under market, and we're not paying for labor because we're doing it ourselves. And it's like, yeah, you have closing costs, you have labor, you have commissions, I mean, I love the shows because it kind of inspires us. But the reality is, talk to a professional about what that actually looks like. Talk to your CPA to see if your projections are accurate. They might have some advice about that too.
We definitely didn't stay at a Holiday Inn Express last night and become realtors and mortgage brokers this morning, for sure.
Right.
So anyways, brother, we live in this great community of the Coachella Valley. You lived here for many, many years. I know you've got offices in both cities right now. Sean, just for you, if this is your first time here, just want to let you guys know there's one of the reasons why Sean and I decided to partner up is the experience that Sean had. Um, why I say that is that he's taken the time and he's now licensed in 48 different states. So even if you're watching this in Oregon or Washington or maybe Idaho or Arizona, where I mean, the list goes on and on and on. If you want to know what states he is, just reach out to him and he'll tell you. But the point of that is that we can not just focus on just the Coachella Valley. And it's the same thing with me. Hey Blair, why did you pick Coldwell Banker? Well, we're in 48 different countries. And so if you are looking for, you're starting that process of buying or selling, and even though that I'm not in your state, I do have connections all across the world and I can get you in touch with a phone call. So that's
Absolutely.
why we do this stuff. So again, but brother, right now, I had a couple questions lately. I have some younger guys that are actually starting to become doctors. There's kind of a little bit of hardship trying to figure out, how to get a loan. Maybe they're just starting, all these different things. So my question to you is, have you dealt with that yet? What are some of the hurdles that you're seeing? So maybe a doctor or a new doctor is watching this or just getting established in the world of medicine, and they really want to go ahead and take some of the money they're earning and put it into a hard asset of property.
Yeah.
What have you heard about this? Am I throwing something out you never heard of, or yeah, I'm dealing with this a lot lately, and this is the things that I'm seeing?
Well, last week we were talking about jumbo loans, and it kind of segued us into talking about this kind of scenario because a lot of us want to be in that price range. A lot of us may not want to put 20% down. So check out last week's episode to see kind of how we were troubleshooting that and some of those different ideas. But relating to doctors, doctor loans are typically pretty easy to do. It does depend on how much money they're putting down for the different programs, how much money they want to spend as well. But it's really interesting when we kind of get in on a granular level of how the different things going on. Like, do you have a 2-year history being a doctor? Are you out of school? Are your student loan payments, are they still deferred, or are you on a minimum payment plan? Is the lender going to hit you with the payments, or can we exclude them? And I've seen in a bunch of different scenarios where our doctors are doing S corps or have partnerships as part of their business, so they're not necessarily a W-2 employee of their business. They might be getting a W-2 as part of that, but they're actually entrepreneurs. A lot of times, they're not employees of a hospital. If you're a doctor that works at a hospital, not typically like a nurse, employer situation. And they do that for a number of different reasons. But when we go into qualifying, it's always interesting with the history that they have of reporting their income and their employment a certain way. And if you've been doing that for less than a year, it can be challenging. But yeah, just a bunch of different ways to split it. And I have a lot of experience looking at that. And there are a lot of programs for our doctors, our firefighters, and other emergency responders where we can get them, some pretty good programs. The doctor loans specifically typically won't have mortgage insurance, which is a huge thing if you're putting down less than 20%. And
let me stop you there real quick because that caught my attention. Why do they not have to have mortgage insurance? Is it because of the way that they typically qualify in their profession? Obviously, when lenders are looking at different professions and different ways of how you're making money, things
it's specifically it's a doctor qualified program.
Okay.
And so some of the banks out there, want to help, doctors qualify, and they have typically pretty great credit scores, high cash flow. And so it's kind of bankable, if you will, that the risk of lending to a doctor because they're employable is somewhat less. But it's always interesting because a lot of times they make a lot of money, But if they're just starting out, they're trying to accelerate paying off their debt, so they may not have a lot of cash on hand. And so that's kind of the rub, unless you're getting a down payment or some assistance. If you're putting 5% down, if you go with a conventional loan, you're going to have mortgage insurance. So
Okay.
It just becomes a fine balance of, if we're going to do that, or maybe they've been 1 year self-employed with their C Corp situation. Um, are they looking at a program that they need to put 10% down, or are we going off of tax returns, or do they have a really creative tax preparer? And do we need to go off a bank statement program? So I just wanted to take some time to just kind of say thank you to all of our doctors, and
Okay.
I know you guys have our lives and best interest at heart, and it's got to be a stressful job, but when you get off work and you get to go home, hopefully we can get you into a good home that you love being in.
Yeah, I think, that's such a big deal. We just have been in contact with some nurses lately, just for you people that are watching this who may not live in it. We have a great hospital. We have actually a couple of great hospitals out here, but one specifically I'm talking about today is Eisenhower Medical Center. Great campus, put a lot of money, a lot of people donated into making that grow. But all of a sudden, there's like this influx of doctors and nurses that I'm meeting that are coming out here. And some of them starting off and, hey, I just need to rent for a little bit. Why, as you said, I got to build up I've got to build up my portfolio. I've got to pay off some loans, but like, give me a couple months. Once I get established, I want to get stuff. Is there a window? Now, one thing, typically when you're starting a new profession, they want to see, 3 months, 6 months, 9 months. Is that window shorter with them? Or is it you still we want to say I want to see a year's worth of bank statements?
So that's a great point. I mean, it depends again on how you qualify. So if you've got a job offer and you're right out of school, it depends on if you're going in as a 1099 or a partner, which means you're self-employed, or are you in a W-2 position where you're an employee of a company? And so typically we can go off the offer letter if it's full-time and you're W-2. If you have a few different companies you're working for and you're part-time here, part-time there, typically they're going to want to see how you're averaging that part-time work
Okay.
with one or two part-time employers over 6 months. With the bank statement program, typically we'll go off of a 12-month history. So the short answer is it all depends. And so that's why we do this, because it all depends on where you as the client are in your journey and what's going on. It's also why we like to explain that, getting pre-approved and pre-qualified ahead of time or as you're on the path, it really depends on where you're going. And if you're leaving it to the last minute and you're waiting to talk to somebody about buying a house once you think you found the perfect house, you've been looking for 6 months, but you've never talked to anybody, you might be a little surprised at how things are set up, either with your credit or what's reporting on your credit, with your savings, or maybe you're in the middle of this, your student loans are deferred for another 8 months, but we got to prove that they're deferred for 12 to not count them against you. So um, it just goes back to getting pre-approved, doing the homework, making sure you get your questions answered for what is actually applying to you.
Interesting. I want to go back to that one part you were talking about it. So actually rewind this, but I'm going to go ahead and say it to you anyway. So you can actually start a process of a loan with an acceptance letter from a hospital stating that they have employment.
Yeah, not just for doctors, but any full-time employed
Okay.
person. You're let's say you're moving from Oregon down to the
Mm-hmm.
desert and you're just not
Mm-hmm.
sure. You think you have to rent, but if you're a 40-hour full-time employee with an offer letter, you don't necessarily have to have, you know, a full 6 months at the new job.
Okay.
We can help you make that transition, and when we know what your start date is, we can get the condition to fund your loan, and then you also provide us a pay stub after closing to kind of firm it up. But a lot of your qualification is based off of contingent conditions, maybe some assumptions in the loan of things that are going to happen. And as long as we make that progress, or we can check those boxes off, your conditional approval is good enough to get the process started. So
yeah, interesting, because now you got my brain working on it, because I know there's somebody out here that just took over a company, and they're, you know, one of their people are telling them, like, yeah, you've got to wait 6 months before we can get this thing doing, and paying exorbitant amounts of rent. But realistically, he should be buying right now. And that's another really good thing too, is I know a lot of us are like, hey, let's kind of wait for this market to kind of see where it's going to adjust. I know it's very fluid, it's up and down. What are rates today?
I mean, rates are phenomenal. Again, it's going to go into your FICO score, the property type, and everything, but we're definitely in the sixes.
Yeah.
And so, I mean, we're out of the sevens. I heard some rates are really, really low right now, but also, I mean, Thursday, Friday, we had a really great jobs report, and then what's today's Thursday, the market's pulled back quite a bit. However, people are just hearing the news from 4 days ago that they're so phenomenal. So they are good, but it also depends on, what day you lock. Are you ready? Do you have a property? The basic advice is, let's do the homework and get prepared. And once you're in contract or looking to do a refinance, we'll decide together the best day to lock based on, the new schedule and what's going on. But it really runs a gamut of loan products, how much down, and what product you're using, and what your FICO scores are. So,
yeah,
but they're pretty great. I mean, they're the best they've been in almost 12 months. So
I know it's crazy, and again, since we're really concentrating on first response people, obviously doctors and firefighters and policemen, and we get that. So let's concentrate. Let's really stay in this. So one thing that I'm hearing right now, maybe you bought 12 months ago, maybe you bought 6 months ago, maybe you bought 5. Doesn't matter, but you were kind of at the rates of 7. I am literally hearing. I just talked to a good friend of mine. I don't know if you know Lisa Hendricks with Chartwell Escrow. Do you know
yeah, I
her?
know Lisa.
Okay. So anyway, she's like, dude, people are starting to refinance.
Yep.
And it's such a weird thought to hear, because we haven't heard that for so long, right? Because everyone kind of, whoever was going to refinance, we refinance at 3.25, 2.75, where we could get in and all that stuff. And obviously rates going up. So why am I going to refinance? And now all of a sudden we kind of got this 7.5, 7.75, I think we might have crusted out at. And now you're starting to see, like, she was like, we're getting a bunch of refinances, and all of a sudden it was so weird, because we've been in this mess for the last 18 months, maybe a little bit longer. That to hear that word refinance all of a sudden, and you've been talking about this, and so guys,
so I think that's what we should talk about next week, because refinancing, because I'm doing a deal right now where this guy wanted to cash out like 250 grand on a second mortgage. And I mean, he's got an interest rate in the threes on his first mortgage, but the blended rate for both loans, it actually made sense for him to take the cash out, get rid of the 3.75 rate, blend them together. He'd save like $100 a month by doing it together, and
got to cash out.
Take cash out. And yeah, let's talk about that next week, because I have this whole blended rate thing that we can do. And what's actually happening is a lot of people took out second mortgages. We have a ton of credit card debt. So I can show you that depending on the credit card debt and the home equity lines that they have, that hanging on to that 3%, 4% rate isn't really doing anything for you. We've been talking about it a little bit, about people putting their lives on hold, hanging on to that. But one of the things we'll talk about next week, we're kind of getting into it now, but what can you do to take out your equity, pay off your debt, combine all those things, and maybe you're selling your property moving on with your life, and you're actually saving money overall. It's just a lot of times we're not taking the time to do the homework and really look at our finances because we're just trying to, as we said earlier, just trying to get through, and we've got a lot of plates spinning. So
trying to breathe right now, right?
yeah,
it's a little bit crazy town. So
yeah.
So again, doctors. So let's really recap this real quick. So doctors, first responders, paramedics, firemen, police officers, they do. I'm not going to say we're different, but there's difference. So they do get a little bit different look because history has shown that they are a good loan option. Am I
Yeah.
correct in saying that?
Right, like medical residents, fellows, medical doctors, dental surgeons, dental medicine, doctors of optometry, um, pe pediatric medicine, pharmacists, chiropractors. It's all different. Different types of doctors. And then, they have all different types of programs for these special interests, um, to make sure that they get certain benefits with different programs.
Okay. So again, first time here. If you've really listened to our podcast, which we're getting a lot of great views and we appreciate that, but if you really listen to it, there are so many different programs that fit so many different people, and I think that is a really big common thread that we've had. This is probably episode number 7 or 8 that Sean and I have done of this mortgage minute, if you may. That's saying that one size does not fit all, right? So there's multiple sizes to fit different types of program. Where am I financially? This is what I have. Do I have a creative bookkeeper or CPA that allows me to do stuff? But today, what we're talking about is all of those things that show those different professions inside the medical field. There's a lot of different options that may be a better fit for you than what you would get down at a local bank. Or lending opportunities. So that's what a great thing why Sean has really flourished in this crazy time of buying houses is because he has options. They're not forced to sell one different product. He's out there like, okay, this is who you are. This is the best product for you out of 10, 15, 3, 4, 5 products, whatever it may be. Here's the one that's the best fits you. So you don't have to go in someone else's box. You can actually be in your own box and have that loan specifically built for you. And that's why when we say we encourage you to take this information and do with it what you want. But if you are looking for a loan, definitely reach out to him and find that stuff. Obviously, in the Coachella Valley or anywhere else in the United States or in 48 different countries, you want to look for a house, let us know that too. So I think that's really great, man. But any final words for you?
No, it's always good getting together, and
Yeah.
we love the education and answering questions. So that's what we're here for.
Yeah. Yeah, just want to be the resource. I know that you see a lot of stuff and some scare tactic headlines that sometimes we don't read through. It doesn't give you a lot of information. So again, this is really, coin phrase it. This is more of a mortgage moment, mortgage couple minutes, whatever he said. But Sean and I really want to be that resource for you. So definitely check into us. Go back and watch a lot of episodes. Sean LaRue, Sean Home Loans. I'm sorry, I keep butchering your
Sean
YouTube
LaRue
channel.
Home Loans. If you search for that, I'll come up on all the socials and my websites and stuff.
Do that. And you can see right behind me, anything Team Armstrong, look that up on YouTube, look that up, and you'll find that stuff. So let us be the resource for you. Again, doctors, if you're out there, if you're thinking about either, which we'll talk about next week, but if you're looking to purchase a home or you're a new doctor has come to your place or you're a paramedic or you're a police officer or whatever those stuff, and you know somebody that is looking to start the process of purchasing his home, start with Sean. And if you live in the Coachella Valley, come talk to me. But that's it, man. I hope that I'm glad that you're feeling better. I'm glad we worked out some technical difficulties from yesterday. And next week, we're going to talk about refinances, which still blows my mind that we're in this conversation already. But
yeah,
refinances,
consolidating debt, making your life easier, and
yeah,
getting the finances right. Take some stress off
guys,
your plate.
Yeah. And you guys if you have any questions or topics that you want us to talk about in the future, feel free to go ahead and direct messages or leave us comments on our YouTube channels, and we will build a program specifically for you. So that is it for now. Have a great, great week. Until we see each other again next week, stay safe, but most of all, God bless.